future, talk radio will actually educate, inspire, and make you think. The future is now. Topics and music that affect your life from Universal Broadcasting Network. Tune in at ubnradio.com.
We're not gonna take it. No, we ain't gonna take it. We're not gonna take it anymore. We're not gonna take it. No, we ain't gonna take it. We're not gonna take it anymore. Just to try and make us.
Hey, hi there, everyone, and good evening, America. This is your host, Alan Lissauer from Financial Sanity Now, and I have a special guest on my show, my daughter, Helena Lissauer. Not only is she... Whoa, that's well-deserved applause. Well-deserved. Not only is she a double major, a recent college graduate in business, but also has been a Dean's List student and president of the student body. Welcome, Helena. Thank you for coming on the show.
Thanks, Dad.
Remember, everyone out there listening, that this is not my show. And this is not Helena's show. I think she wishes it was. Let me say that again. This is not my show. This is your show. Finally, a place for you to complain, to be concerned, to get answers, and to voice your consumer problems. We have no interest in politics. We don't care if you're a libertarian, a Democrat, a Republican, a socialist. We just don't care. We want to hear your story. We're here for you, the consumer. We want to hear your consumer problems. We want to hear you get angry, and get angry about things that are important to you. We want to hear what makes you upset.
We know things are bad, worse than bad. They're crazy. It's like everything everywhere is going crazy, so we don't go out anymore. We sit in the house, and slowly the world we're living in is getting smaller, and all we say is, please, at least leave us alone in our living rooms. Let me have my toaster and my TV and my steel-belted radios, and I won't say anything. Just leave us alone. Well, I'm not going to leave you alone. I want you to get mad.
And I'm not going to leave you alone either. And we really do want you to get mad. Stop looking at the news, at what's going on nationally or internationally. Start looking at the problems you have, the way you're spending the money, the amount of credit card interest you're paying, what kind of mortgage do you have, how are your property taxes, how is DWP billing, where are all those extra picking charges coming from? So today, our topics will include corruption in large banks. How does that affect you? Nitpicking over charges on bills. I hope we can get to all that because I'm a nitpicker. I hate it when I get my cable bill and then I see an extra $10 charge and I have to argue every month about it. Various ways for you to get out of debt. There are ways to get out of debt, and we have several of them for you. And an overview about how Financial Sanity Now can help you. Helena, did you want to add anything to that?
Yeah, I mean, just going, back over the topics, including corruption in large banks, you had a great point. There's been a lot of it lately, especially the Wells Fargo scandal, where they've been under scrutiny. And Bloomberg Businessweek actually quoted that millions of accounts were created without the customer's consent, resulting in paid fines of $180 million.
And that's correct. We're going to talk about that. There were over 138,000 complaints against Wells Fargo over that issue alone.
They were also accused from a public official recently of some wrongdoing with mortgage lending, additional fees, and a lot of denials. They seem to be protecting the investor more than the actual consumer these days, which unfortunately is a problem for many Americans.
It is. Look, we all know we're not in the housing crisis now. Myself and Helena worked on these problems when we were in the housing crisis. But that doesn't matter. There are people now going through divorce, going through sickness, going through separation, going through problems out of their control, and they need help from the banks. I will say some banks have been more cooperative than others. Wells Fargo has been difficult. Bayview has been impossible. If anyone has a Bayview loan, let us know, because they're awful, and we want to put in complaints against them.
Yes, we definitely want to incorporate some more consumer complaints against Bayview and other lenders that have been involved in misleading and unethical business practices that have resulted in consumers being, pardon my language, but screwed over.
No, that's not so bad.
Another source
language.
explained that the Consumer Financial Protection Bureau had 5,300 Wells Fargo employees have been fired for using improper sales practices, but they were trained to use those improper sales practices. So there's been a lot of corruption with Wells Fargo, and a lot of corruption in other banks, including Bank of America. They recently announced, I think it's 2 to 3 days ago, maybe, well, within the last week, that they will now be charging for people who can't afford to keep at least $1,500 a month in their account, along with a direct deposit. So the people that are low income, that were able to sustain bank accounts and use their bank accounts to pay their bills through Bank of America, are now getting charged a monthly service fee. And now I know a lot of lenders, some people will say, well, some other lenders have been doing that for a long time. But Bank of America is now just changing the rules on a lot of their customers, including and especially they're targeting low income people, so they can't afford it, and they're going to tack on more fees on top of it.
So are there any, let me ask you this, and I don't know the answer, are there any way that Bank of America could let that go if someone says they're low income, below a certain threshold?
Not at this point.
No.
Actually, there's been a uproar on Facebook where people have been writing and posting about it, and this is all within the last week, saying that they're closing their accounts and they're basically taking their businesses to credit unions, which I would advise for.
I would advise that also. Credit unions are much better.
Yeah, they tend to be more honest. They tend to be,
Yes.
they want your business, so they will bend over and they will try to work with you and see how you'll fit in their organization, versus in Bank of America, Wells Fargo, and some other larger lenders where it's on their terms. Everything is on their terms. They make the rules. They can change the rules whenever they want, and they're protecting the investor. They're not protecting the consumer. And that is where I have a problem.
Well, as we know, we live in a capitalistic society, and everyone's beholden to their shareholders and their share price. When you show more profits, your share price goes up. When your share price goes up, the people who run these banks get amply rewarded. So, I mean, it's not a secret that this is what's being done. All we're asking for is a little fairness, but we're also asking for something else. We're asking if something happens to you, the listener, for you to get in touch with us. If we band together, there's more we can do than if everyone sits in their home and worries about what's happening in Korea or some other place. Mm-hmm. Be concerned with what's happening to you, whether it's $10 here or $12 here or $6 here.
That goes into the next big point, which is nitpicking charges. I recently had a AT&T bill where I spoke with the loyalty department, and they told me, well, you've been with us for over a decade. We're going to keep you at a fixed set $60 a month for your internet. That's all I have with them besides my cell phones, but this is $60 a month for my internet. And this is my personal story that I'm sharing.
Okay.
And I originally, when I had a problem with them, they had overdrafted my account twice in 1 month. And then they not overdrafted, but they auto billed me twice in 1 month, and then they billed me again the next month. So there was no credit. And I had to call them and say, what happened and why is it so high? Why is it, let's say, $85 and not the $60 we had agreed upon? And they said, oh, sorry, it was a mistake. We'll make sure to give you some credit. I said, I'm going to pull myself off of autopay unless you guys fix this. So I pulled myself off of autopay. They fixed it. They sent me an email confirming. I put myself back on autopay. And this month, it went from 60 to 93. So I had to call them again. And I said, okay, what happened now? I have this email saying you agreed upon $60 moving forward every month. for the same internet. It's not like I'm getting a better service for a higher price. And they said, well, you know what? It looks like we made another mistake. So let's give you some credit. But see, my time is valuable.
Right.
I value my time.
Yeah, but at least you're doing it. At least you're doing it.
Yeah, but I could be
And-
working. I could be
and
spending
how many
time with
people
my
are not
child. I
doing
could be
it?
spending time with you. I could be doing a lot of things. But instead, I have to get on the phone, navigate my way through their system, and get this refund of $33, which might not be a lot, but for people that don't pay attention to their bills and they have all these tiny little additional charges, and you take those little additional charges each month where these large corporations are overcharging people, and then you multiply it by a year, and your annual rip-off costs is
Millions of dollars.
I mean, just $1,000 for me alone, let's say, with random new fees from Bank of America if I don't have the amount in my account. And there's a lot of other nitpicking charges besides AT&T, DWP. I know you had brought up a issue with the tiers.
Well, let me talk about AT&T for a moment with you.
Yeah.
You know, we did a whole show on net neutrality and the fact that now there is no net neutrality and everyone's bills are going up. And if you don't pay it, they can limit the way you get streaming. You probably have Netflix or something else in your home.
I do.
And let me ask you, in your apartment complex, is AT&T the only provider?
They're not. They do provide Spectrum. I know in some places, there's
In your
only-
building?
They do,
Okay.
and maybe even another source. So I've actually weighed that against them in order to negotiate the $60 a month moving forward.
Okay, well, you're doing
Although
well.
my original bill was $50, and it's the same service, so it's just going up over time. And we all know inflation is real,
It's real.
even though people deny it. It's real.
No, it's real. It's very real.
Unfortunately,
In fact, it's-
wages aren't going up as fast as inflation.
No, it's the
but
one thing
that's a whole
that's
nother
real.
radio topic.
That's another topic.
Yeah.
That's true. Well, let's just go through the intro a little bit, because Wells Fargo, we discussed that a little bit. The accounts that were created totaled over $200 million, and they were accused of wrongdoing. The thing that happens with Wells Fargo and with all banks is they get a fine. And the fine is never equal to the amount that they ripped off. It just never is.
My problem with the
so
fine
they're
is
better
that-
off doing it and getting a fine.
That says a lot just in itself. And where's the regulation? Where is the pushback from the politicians or even from the people closing their accounts and saying, you know what, I don't want to be ripped off anymore. I don't want to have to deal with, miscellaneous charges and unauthorized charges and
I'll tell you
unauthorized accounts open.
I'll tell you where it is. It's the ignorance that we're trying to fight here on this radio show. So if you're listening to this radio show, go to a credit union, use your feed, use your money, and take your money out of Wells Fargo and Bank of America and start making a difference. Every person can make a difference. I want to quote Lao Tzu, who was a Chinese philosopher, who said a 2,000-mile journey starts with one step. We're trying to make one step here. We know we're small, but let's all make one step. Let's not give Wells Fargo our business. Because as far as government regulation, I hate to say this, but it's been terribly weakened under this administration. And I'm not going to get real political, but when it comes to issues, I do become political. This administration has weakened the Consumer Protection Agency to a horrible degree.
The CFPB.
They've weakened, the Consumer Federal Protection Bureau. They've weakened general regulations, and it hurts the consumer. Payday regulations have been weakened. Credit card interest rates have gone up because there's no protection for the consumer.
And that brings ourselves to another point. A lot of people are overwhelmed with debt. There's so much debt. And I think, and correct me if
More
I'm
than
wrong,
ever.
or correct me
More
if I'm
than
wrong,
ever.
Dad, but America is leading with credit card debt, with mortgage debt, with other debts. I mean, a lot of countries they're not dealing with these type
No,
of issues.
we are the biggest business in America is debt. People who control the debt, who you owe money to, that's the biggest business. Mortgages, credit card debt, student loan debt, and of course, let's not forget that our own government is $20 trillion in debt. When we say in debt, someone's holding that, and someone's getting interest on it. You see, debt is a business. And if you understand that, every time you're about to charge or take that cruise and put it on a charge card, I tell you, don't.
Or put it on a 0% interest. I'm not against.
I'm not against that.
I'm not
but
against
so many
debt,
people
but
let it go.
But people need to have a plan of action. If you're not going to have a plan of action, and you're not going to have a way to pay off this debt, you're going to come into some money
Quickly.
during tax season. You're going to pick up an extra job. If you can't afford it, don't do it. And if you've already gotten yourself in a hole, most of our clients have. That's why we have a business. We have a business because a lot of people have gotten themselves in a hole, and that's our job to basically
Get you out of the hole.
Get you out of the hole.
Right.
A lot of people don't realize there's so many resources. I mean, if you just Google Financial Sanity Now, you'll see Yelp reviews, you'll see real people, real testimonials. Those are not actors that are on our website at www.financialsanitynow.com. Those are real testimonials of people that we've saved hundreds, thousands, hundreds of thousands of dollars. I had one client who had a mortgage of $7,425, let's say, $7,400, over $7,400, and I brought him down to a payment of $2,500. That was me.
amazing.
That was my deal.
Right.
That was something that I had
That was
processed
great.
and
Yeah.
worked with the customer and said, hey, what's your hardship? What's going on? Most of
right.
our customers have hardships. I mean, we've had people that have unfortunately passed away from brain cancer who have, their wife had popcorn lung cancer and they never smoked a day in their lives. We've had horrific situations of people that we have been able to help their spouses who are left in debt with high interest rates when these banks are borrowing from the Federal Reserve at such low interest rates, and then
Right.
they're charging
Almost
people
nothing.
30% interest on credit cards, and they're handing out credit like it's, and people think, okay, well, I have $8,000 in credit from this lender. Let me, buy what I need, this, that, and then how are they going to pay back 30% in
They're
interest?
not.
I mean, that's the
They're
real
not.
question
They're not
is
paying it back.
how do people pay back 30% in interest on large credit card debt? Some of our clients over $100,000.
Yes.
So it's $30,000
Well-
just in interest. I mean, then you multiply it over the years, it's more than that.
Well, we are a consumer society. Everyone out there was brought up on credit cards. Most of you received your first credit card in college. Wells Fargo is notorious for giving credit cards to college kids. Your own sister did it and started going over her limit.
Mm-hmm.
And we buy things. You have to understand there's things that you need and there's things that you want. And if you need a textbook, I get it. That's fine. And you may have to pay some interest on it. But you don't need that extra pair of shoes. When you're making a lot of money, buy 5 pairs of shoes. But we really emphasize being frugal. And we know that America, and I will tell you this, Helena, I don't know many women who don't have 30 pairs of shoes.
I don't.
But
you brought me up. So,
Well,
and if you can't afford something, but you need something, we're not saying don't get it.
Right.
We're saying go to places where you can afford it. Don't be afraid if you have children and you're struggling and, instead of getting yourself into more credit card debt and they're growing out of their clothes, buy secondhand clothes. I do. Buy secondhand pairs of shoes.
you know a few
Your
websites that are
children's
good for that,
growing.
right?
Yeah, I mean, just, not to plug anything, but Facebook has a marketplace app where they're selling, they're selling,
There are quite a
used
few,
used
right.
clothes, and they have offer up
Used
and
furniture.
let
so you
go.
don't have
There's
to,
different
right.
apps that people can use to save money. And, even shopping at places like Ross, if you need a business suit, you're going on an interview.
Well,
you
you
can't
don't.
afford.
You don't work for Ross, right?
No, but the point is, you don't have to spend a lot of money to look nice.
No, you
don't
don't.
have to spend
You
a lot of
don't.
money to live nice. You can get secondhand things and still be okay. I mean, the only thing you shouldn't get secondhand really is food. Obviously, you wanna, buy
Well,
fresher food
if
you
you're
can.
making a lot of money, spend what you want.
Right.
Okay, but we're talking about
Average
the average
Americans.
American has a lot of bills. Everywhere they look, there's a bill. There's a mortgage. There's taxes. There's property taxes. There's insurance. There's health insurance. There's life insurance. There's tuition. I mean, the list goes on. And again, I suggest make a budget.
And
There's
shop
plenty
around.
of software for budgeting.
Budgeting, I mean, they have Google Sheets now. You could make a budget on Google Sheets. And, I mean, just if you look at everything, for an example, if you can't afford to put in $200 into a life insurance policy and you have children, there are life insurance policies that are termed for 20 years that will cover at least your child's childhood, so that if anything happens to you, they can fend for themselves after those first 20 years. And it's like, let's say $25 a month for 20 years, $25 a month,
Right.
for like a $600,000 policy, just in case something happens to you, to protect your children. I pay it. I pay it because it's peace of mind for my son to know, just in case something happens to mommy, I have this designated. And that brings me to another topic. A lot of people don't have wills. We just posted about that on our Facebook.
I agree with this, but I want to stay more on topic. Wills are another
Yeah,
show.
no, of course. I'm
wills
just
and
saying
living
we
trust.
posted about it on our Facebook recently. So if you want information about how to write a will, we actually posted instructions, very, very simple instructions on our Facebook. So if you're on Facebook and you type in Financial Sanity Now, you will see a lot of interesting financial topics, a lot of insight, a lot of tips on how to be responsible.
That's right. And we're here for you. I mean, that's
Yeah.
what we do. We're here for you. We're not charging you for that information. We do charge for certain services, and the services we charge for are the ones we're going to save you a ton of money.
Yeah,
So if we charge you something, we're going to save you 3 or 4 times that amount.
at least.
All right. So
And we're talking monthly, at least.
let's go. Just make sure we're covering our topics. We've talked about the banks, how Bank of America, how Wells Fargo are next to seventh level of Hades. And if anyone doesn't know what that is, read up on it, because it's way down there. Okay. And we also just gave you some solutions. Go to a credit union. Look at your statements. Look at these extra charges. I'm going to tell you something that happened to me. I never bounced a check, you know that. But I was away, and a couple of people didn't cash their checks, George. And I came back, and everyone had cashed them at once. And it was my fault, and there was an overdraft charge. But the bank charged me an overdraft charge on the overdraft charge. Then they charged me an overdraft charge on the okay.
That sounds unethical.
Seriously, there were 4 overdraft charges.
Mm-hmm.
Because once they started the ball rolling, their computer kept saying, well, there's not enough to cover the overdraft charge. So we were talking about, I think it's $30 or something per $34. So $100 and something. Well, look, I complained. I'm a good customer. I got it removed. But there, I'm sure you guys are getting overdraft charges out there, even if you're getting one once in a while. $34 is a lot of money.
Can you give them some tips? What did you do? You say you complained. What
I-
steps did you take?
I-
What words did you use?
I went to a banker. They call these people bankers. They're the ones that sit at the desk. And I said, look at my account. I never overdraft. Now, if you're overdrafting all the time, this is not going to work. I said, I never overdraft. You can see what happened here. I really need you to refund the money. I mean, that's all I said. Now, part of it is I am a customer with this bank. I do have a mortgage. I do have other things. So they look at that. if you're running a minimal account and you're bouncing checks, don't try it. You're just going to have to eat the charges. The other suggestion is get an overdraft. Most banks will give you a $300 overdraft. And I suggest sign up for it. It's worth it to pay a little bit of interest to cover your overdraft.
Yeah, or there's ways where you can not overdraft. There's ways where you can have a budget, know what your set monthly bills are, know where you're going to go over so that you don't overdraft. I mean, I know it's not as simple for people, especially a lot of people, we're all set in our own ways and we all have our own flaws, but that's where we come in. That's where Financial Sanity Now comes in. That's where the team of experts comes in, not just for your overdraft charges. Our main focus throughout the last decade has been negotiating on mortgages. Now, not just first mortgages, second mortgages, third mortgages. We take an interest rate that, let's say it's outrageous, 6%, 6.75, and if we can just lower it, what's the deal, Dad? If you lower it 1% over
every percent for $100,000 will save you between about $20,000 over the term of the loan.
And that is a giant chunk change. Who wouldn't want an extra 20,000, 40,000, 60,000 here or there? So we've done that. Now that's just with first mortgages or second or third mortgages negotiations, but we've also done settlements. My uncle had a large loan with Bank of America. It was a second mortgage.
What's that, Uncle Murray?
Yeah, Uncle Murray. And do you remember it was about $260,000?
It was about 300.
Yeah, it was almost 300, and he had a lot of medical bills, and he had a lot of issues, and he unfortunately could not pay it back. He did not. His house was underwater. He had a lot of credit card debt. He didn't have any other asset other than the house that was underwater. He didn't own a vehicle, and I was able to, with your assistance, Dad, settle it out for, was it $60,000? $60,000. That's a lot of money that
savings.
Uncle Murray didn't have to pay back. And
Right.
that's a true story.
That's
so, I mean, we've saved people when they were struggling with medical bills that they couldn't pay back.
Let's go there a minute. Let me just
Yeah.
talk a little more about mortgages.
Yeah, talk about
Some of you out there
mortgages.
may have second mortgages that you took out 10 years ago when you took your loan out. Whether you took it out in 2006, 2007, 2008, they were still giving out second mortgages. Most of these loans were what they call 10-year interest only, then 10-year amortization. Mm-hmm. What that means is you paid an interest rate, that's a low payment, right? Now you have to pay the whole thing back at the current interest rate, and pay back principal and interest. Usually that triples your payment. People don't think ahead, so they sign this paper and they're coming due. Now, we have a number of clients in this category, and we want to tell you that we're available to renegotiate those loans with the bank.
You're talking about the terms.
I'm talking about the term of the loan.
Not just the settlement. You're talking
and the
about
interest, right? I'm talking about taking that loan and stretching it over 30 years.
To match the first.
Right.
Or even a new 30-year amortization.
Exactly.
Okay.
And that will lower your payment considerably. Many times we'll get the interest rate lowered, right?
To make it affordable.
Right. We just did that with Stacy Brown, okay? And we're using her pseudonym there, but it is a Stacy. And the point is, some of these loans actually balloon in 10 years. And who has that money?
Can you explain to people what balloon is?
Balloon
I think a lot of
is
consumers don't understand
the
what a
loan
balloon
is due at the end of 10 years. You
So if
paid
you-
interest only, and now the loan is due, and it's maybe $120,000 or 60 or 50. I just settled one. Now, this was a strange case. Okay. So these people, sweet people, had modified their first mortgage. They had a second. They went through a bankruptcy. And what they didn't know in the bankruptcy was the second mortgage stays on the house because it's what's called secured. It's secured to the house. So they somehow thought they got rid of the debt. Well, they did. They got rid of the debt. But the house still had a lien on it.
Right.
And the lien was the amount of the mortgage.
Did they charge that off? Is that a charge off?
No, what
Okay.
they did in the worst case, this house started to gain, become more, have more value.
Equity.
Now this $36,000 small second had ballooned to $76,000. It was 11% interest over 10 years.
Over double.
Ignored it, totally ignored it. Now they sold this to a collection agency, and the collection agency came a knocking for how much? $76,000. So, I mean, that's a shock to the system.
Mm-hmm.
Now, I explained many times, and I'll explain it again, that in bankruptcy you do not get rid of seconds if you have equity. They're called secured notes. Secured notes, the reason you can't get rid of them, they're secured by real property.
Right.
They're not going to come after you personally, after your bank account, but they are going to come after your home.
Your asset.
Right.
The main asset. Yeah.
It's attached.
Mm-hmm.
It's attached. Look at it as a leech that's
Well, we've
attached to you.
had clients that have been sued by their lenders because they didn't pay what they owed.
What they do is they try to foreclose. That's what the lawsuit is.
Right.
And in this case, they try. Now, I was able to settle this out. By the way, I just completed that today,
Awesome.
settling it out.
Awesome.
The settlement was in the 30s. Had they done this earlier, before they were being foreclosed on, it would have been less. So I say, don't hide your head in the sand.
Yeah, people should really contact us because
Right.
if you don't
hide
have the
your head
tools,
until it's the last moment.
if you don't have the tools, we do, and a good contact number is 866-753-4028.
I'm going to repeat that.
866-753-4028.
Or you can text us. Give us your information by text.
310-384-4352.
Right. It's important. I hate to say how many people come to us when it's late.
Mm-hmm.
When they're being, I had another lady just recently. She has a sale date next month. Well,
And it's very important.
what are you waiting for?
If you have a sale date and you do want to stay in your home, to contact us to see if there is something that we can do. There is no guarantee, unfortunately.
No, I wish
but
there were.
we are the squeaky wheel. We
Right.
are the consumer advocates. We are the people that, I mean, I don't want to toot my own horn, but, and maybe I
no.
shouldn't jinx it, but
Well,
you know,
you got to toot a little there.
we've never lost a house that we've actually taken on. We've always come up with a plan of action
Right.
for how to resolve the debt, how to resolve the issue, how to bring peace of mind to you, the consumer. And that's really what Financial Sanity Now is about, is peace of mind.
That's right. That's right. When we meet with people and then at the end of the meeting they realize there's a way through the tunnel. That's important.
Do you want to talk a little bit about credit card debt and what we've been able to do recently, especially in the last few years for people, and
Well,
what
I
types
do.
of options people have?
I do. Let me first say that over this last year, everyone's felt the economy's good. Consumer confidence is up. Spending is
It's awesome.
way up. The report came in over this holiday season that the amount of like $46 billion a day was spent on consumer goods. I don't know if what are those expensive purses people buy? What's the name of those? Cartier or something.
Isn't that a watch?
I think it's also a purse. I don't know the names of all these, like
Michael Kors?
like
and
Michael Kors, Jimmy
Coach?
Choo shoes.
I don't know.
For $800, whatever people are spending on credit card debt is now at its highest level, higher than it's ever been. Now, people, that is a problem.
We don't want to knock the people that love brand name things. If you have the
No.
money, buy it. But if you're buying these things out
On
on credit,
credit,
and your family is having a hard time paying the mortgage, it might be time to reconsider certain spending habits.
So when it comes to credit cards, you hear a lot of ads on the radio or on the television. Well, here we are, U.S. debt relief. we'll take care of your debt. Well, yeah and no. Yes, they may take care of your debt. Here's what they do. They take your total debt. They have you put money in the bank over 6 months while your credit worsens. And then at the end of 6 months, if you have enough money in the bank, they'll go to the lender. Let's say it's Chase, and it was $10,000, and they'll offer them $5,000. Now, honestly, Chase will take the $5,000. Okay? They'll take the $5,000. But you don't need someone to do that for you. They'll take $5,000. If you need someone, come to us. These people will charge you 30% of the debt. They'll charge you $1,500 for that one thing alone. If we do that, we'll take your cards and we'll probably charge you 5%. But we'll get you maybe 20 cents on the dollar. And again, I can't say exactly how much, but there's a way to settle out debts. Don't fall for the first people you hear on the radio. Call us, compare, because we can settle cards. And
besides settlements, there's also the other option that I've been working on with a lot of people.
I like the other option for a lot of reasons. You want to explain that?
Yeah, I mean, we propose a 60-month stretch, and we always propose 0% interest, and it doesn't mean that we will always get 0% interest, but it's worth proposing.
Let's take the caller.
We have a caller? Okay.
Yeah. Hi, caller. Hello.
Oh, yes. Hi.
Hi, caller. Hi.
Hi, my name is Susan. Hi.
Hey,
Hi,
Susan.
Susan.
Thanks for calling in. I appreciate it.
Hi.
What's happening?
I've never called into a show like this,
Well,
so I'm a little nervous.
We're happy to have you.
Well,
Anyway,
yeah,
sorry.
We're happy you're calling in. We'll put you at ease.
Thank you. Thank you. So I have a question about credit cards.
Okay. Well,
Okay. So it, how come it seems that, if I have like a lot on my credit cards, then they seem to extend how much money I can put on the cards, or I get more offers. It's so tempting. And then sometimes they actually, even if I get like a good deal and I take a credit card, then they raise the interest rate, which wasn't the original deal. So they can just do that? Like they can just do anything?
I'm going to
Here's what I want to say about that is that the banks make the rules. They can change the rules. All they have to do is send you a little paper in the mail saying, hey, look, the terms are going to be different. We are now going to be having this penalty or this new amortization or this new interest rate. And it's up to you, the consumer, whether or not you want to continue with that lender, whether or not you want to continue to give them your money and interest paid back, or your money in general. So, my question to you is, what are you doing to protect yourself from overspending and from, maybe and having too much credit card debt?
Well, I'm trying to, I had a couple of situations, a couple of health issues. It got a little bit out of hand, but I'm working, diligently now to get everything, to do better and whatnot. And it just seems like they're trying. It almost feels like they are like encouraging it to continue to get worse rather than to get better. And and like you said, that they just send a little piece of paper, but then it's too late. Like the charges are already on the card, and even if I stop using the card, then the interest still compounds, or whatever you call it. So it's not like, you know what I mean? Like I can't pull the money off of whatever it is that I've already charged, thinking it's a good interest rate.
Well, about how much would you say you're owing on these cards?
In total.
It's not that I charge it all. Some of it's it's interest, but it's a little over $20,000.
So what would you say if we?
But I'm working on it right now.
What would you say if we could get you maybe 0, 1, 2, or 3% interest and pay it off that way over time? Would that be helpful?
Over a period of 5 years instead of the 15 years that they propose.
That's crazy. I mean, that would be amazing. It's so it's like I see the money increasing, and even if I don't charge anything.
Right. No,
Well,
yeah, of
it's
course. That's the way it goes. So
yeah.
we're going to give you our direct line. It is 310. Let me know when you're ready.
Okay, wait. Let me get a pen. Okay, let me get a pen. All right. Okay, go ahead, please.
310
Yes.
384 4352. And that is for a live representation. And if you wanted to call and, let's say, set up an appointment, we also have an 866 753 4028. And we have a couple of different options for you. We have a low interest program where we know how to consolidate debt and pay it off over a period of, let's say, 5 years versus the 15 years that they always put on everybody's statement, right? Or we have an option of settling it out. Now, that's if you had the cash.
Yeah, but
So-
I'm going to recommend, this sounds like a younger woman, and I'm going to say I don't want to ruin your credit, so I think the lower interest rate is better. You know,
Well,
so
it's not
settlements, settlements, we're going to talk about that on the show.
Yeah.
There's consequences to settling.
Mm-hmm.
And so I would say if you can, you call us. If we can come up with a reasonable payment monthly, I think that's the better alternative.
I agree.
If not,
Well, where's your office? Because I live in California.
yeah, we're in Sherman Oaks, California. Now we can do it. We can do
okay.
it. We can.
We're a family-based business in Los Angeles.
Okay. Okay, I'm not too far away from there.
Okay,
not too
well,
far.
we can do a lot by phone and internet as well.
Oh,
Right.
good.
So-
Whatever's
Oh, good.
convenient for
Okay.
you. We work
All
around
right.
you, the customer. So
Thank you.
Well, thanks for
I'm
calling.
so glad I called.
thank you so much, Suzanne. We
Yes.
hope we can help you, and we hope to hear from you later on this week.
Okay. Yeah, maybe tomorrow.
Okay, sounds good.
yeah,
Thank you.
tomorrow.
Thank you so
Okay.
much, Susan.
Wonderful.
And thank you
Wow.
for calling in.
All right, that was very sweet.
All right, thank you so much.
Thank
Okay.
you, Susan.
You know, I want to say this to the general audience, and I don't want to say you're wrong about settlements. Settlements can be great in certain instances. And
Well,
I'll
if you
tell
already
an
own your
example.
home and you're
Well, actually, if you don't own your home, it's easier. Because if you own your home and you try to settle, sometimes they say, hey, we can attach your house. I have certain cases. I have a lady, I'll be very clear, she's losing her mind.
Yeah.
She has no assets. She has about $60,000 in debt, and she wants to settle the cards. Now, there's no consequence to her to do this. They can't come after any asset she has. She's not worried about her credit, and she's older. And I say that because when these cards get charged off, it takes 3 or 4 years to recover your credit.
in comparison to a
Right.
bankruptcy that takes
Right.
7 years,
7 or 10 years. So
It's
it's better.
a lot better. Than,
There's also a tax consequence, which I would suggest everyone consult your CPA because settlements are considered earned income.
it's a percentage, though.
Right.
It's a percentage in comparison to
so
paying,
so
paying
we
the
go
whole thing
over all
back.
that with you
Yeah.
to see what is better. What is better? Lowering interest rates, long-term payment? Some people don't want that. They just like, I can't do it. I just want to settle and be done. Got it. And the other part about owning a home is you can't really go bankrupt with a house because they can take equity in your house. So, you know, everyone fits a different niche, and that's what we're here for, to see what niche you fit and how we can help you with credit problems. You know, and it's not all credit card debt that's bothering people. And I don't want to get into every type of debt, but I do want to touch on two types. One is student loan debt. We're not going to talk about it much here, but people have it. And the effect of that is it's taking a piece of their budget every month. We'll talk about it on another show. But the other one is medical debt.
Yeah, that's been a big
I don't know if
problem
you're
lately.
aware how much medical debt is out there, but it's huge. It's really how can I say this? Something like 1 in every 7 families is affected by medical debt.
And the thing is, it's the average American, which unfortunately, most of us are. There's a very small percentage that are, that have enough money to support whatever happens, they can pay top dollar premium health insurance. And, it just seems like some people are just trying to get out of a hole. They have one issue after another. So they have medical debt. So they try to, use their credit cards just to survive, like Susan. And then they have like a whole nother issue. They have more problems. We're hearing more and more about people who are getting hit with huge medical debt and no way to pay them back. I mean, the New York Times recently wrote an article about a laid off New Jersey supermarket executive who received $171,000 medical bill for a 6-day hospital stay. $171,000 for a 6-day medical stay? I mean, I'm assuming he might not have had insurance. He might have. I don't know. It doesn't really say in the article here, but I mean, what in the world is happening when somebody gets a bill that's, if the average American worker is, let's say, has $50,000 in, in income every year, how can they pay off a bill that's almost 4 times that amount?
Well, most people do have some insurance. I will say that, but still, I think there are people with catastrophic illness, and it's insane the way bills are. Medical billing is a thing we could get into at another time, but what's left, everyone has a deductible and everyone has a percentage. So even if your insurance covers you, you get paid 20%. So if I have a $170,000 bill, now I have a $34,000 bill. That's really not helpful to most people to all of a sudden get hit with that. So it's very important to talk to us about medical debt. We do deal with it. We deal with the hospitals. We deal with the doctors. And we're able to cut that debt down. So, we're going to have to wrap it up. I hope you don't mind. It was really great working with you today
thank you so much for having me
talking
on,
about
Dan.
this. And I want to say, just go over the services that we offer. We offer credit repair. A lot of times you have credit issues and we have to repair it and talk to the credit bureaus about this.
The 3 main credit bureaus, including Equifax, unfortunately. And we offer mortgage negotiations, we offer credit card negotiations, and we offer, debt settlement.
We offer debt settlement. We offer second mortgages. And you can always find us by going to Yelp and looking up Financial Sanity Now.
Lastly, I think we should wrap up with the what we're offering, which is the free financial analysis and budget plan for people that are interested to know how they can get themselves out of debt free of charge. This is a free financial analysis. You just call 310-384-4352.
Or text us. Text us and say UBN. The keyword is UBN.
That's how you get
free
the free
credit report analysis. We'll go over your credit report with you at no charge. Let's see what's going on. Let's see how it can be improved. And you can always go to our website, www.financialsanitynow.com. You can go to our YouTube page or our Apple's iTunes page to find out more. And remember, we're always here for you. Call us anytime at 818-906-2385. That's 818-906-2385. And remember, America, to keep calling in with your stories. Remember, we're here to help you. But most of all, remember, we're not going to take it anymore.